Have you ever stopped to think about what actually happens to your money after you deposit it in the bank? Because it's not just sitting in some dusty old vault. Nope, it's actually the key ingredient, the fuel for the entire banking system. And today, we're going to pull back the curtain and see exactly how banks turn your hard-earned cash into their profit.
So this is the big question, right? Your money is safe, it's protected, you can get it whenever you want, so how in the world is the bank making any money from it? It kind of feels like a magic trick, but believe me, the answer is surprisingly simple, and it all kicks off the second you make that deposit.
Okay, so let's start by following the money. We're going on your deposit's hidden journey, because it's a trip that most of us never, ever get to see.
First things first, let's bust a huge myth. You know that image you have from the movies? A giant, impenetrable vault stacked to the ceiling with cash? Well, that's not really how it works. The reality is, the moment your money hits your account, the bank puts it to work. It becomes an active, moving part of their business.
This breaks it down perfectly. It's a simple three-step dance. Step 1, you deposit your money. Step 2, the bank takes your deposit and pulls it together with deposits from millions of other customers. And Step 3, they take that giant pot of money and start issuing loans to people and businesses who need it. That's it. This simple cycle is the absolute bedrock of modern banking.
So, we know they're lending out money, but how does that turn into actual profit? Well, that brings us to the bank's main profit engine. It's a crucial concept called the interest spread.
The interest spread is the heart and soul of a bank's business plan. Put simply, it's the gap between the small interest rate the bank pays you for keeping your money with them and the much, much higher interest rate they charge someone else to borrow that very same money.
And this lays it out perfectly. You've got two sides of the same coin. On one side, there's you, the depositor. You earn a pretty small percentage from the bank as a little thank you. On the other side, you've got the borrower, who's paying a way bigger percentage to the bank. That difference, that space in between, that's where the profit is. This chart makes it crystal clear. Let's say that smaller bar is the 2% interest the bank pays on your savings. Not bad. But now, look at that bigger bar. That's the 7% interest they're charging someone for a loan. The bank's profit is literally hiding in plain sight. It's the gap between those two bars. And quick aside, whenever you hear the news talking about the central bank raising or lowering rates, they're basically playing with the size of this gap, which has a huge effect on how much money banks can make.
Let's put some actual numbers on this. Say you deposit $10,000. At a 2% interest rate, the bank pays you $200 for the year. But then, the bank takes your 10 grand and loans it to someone else at 7%, which means the bank earns $700. You see where this is going, right? They take the $700 they made, subtract the $200 they have to pay you, and what's left over? A cool $500. That's their profit, right there.
And of course, they do this across a ton of different kinds of loans. That giant pool of deposits is funding everything. We're talking huge home loans, loans to help businesses grow, car loans, personal loans, even your credit card balance. Now, just imagine that $500 profit we just talked about, but multiplied by thousands, even millions of customers. You can see how this becomes an absolutely massive stream of revenue. So, making money on that interest spread is the main story, but it's not the whole story. There are some really important rules they have to play by and a few other ways they bring in cash. So, let's zoom out and look at the bigger picture. Now, this is a really critical point. There's a safety measure built into the system. Banks aren't allowed to lend out every single dollar that comes in the door. They have to, by law, keep a certain portion of it in reserve, just to make sure there's always cash available when people want to make a withdrawal. That money is totally off limits.
And this whole system has a name. It's called fractional reserve banking. It's all about striking a balance. Banks keep a small fraction of the money in reserve, hence the name, which frees up the rest, the majority of it, to be loaned out to keep the wheels of the economy turning.
This donut chart shows a pretty common example. If the reserve requirement is, say, 10%, it means for every dollar you deposit, the bank has to keep 10 cents locked away. But the other 90 cents? That's now available for them to lend out. It's a simple rule, but it's what keeps the system stable. Okay, so while loans are definitely the king when it comes to bank income, they have a few other tricks up their sleeve. Banks have gotten pretty creative with fees and other services that really start to add up.
And I'm sure you've seen some of these on your own bank statements. We're talking about all those little charges, monthly maintenance fees, fees for using another bank's ATM, those really painful overdraft fees, even fees for just processing a loan. So while the interest spread is their main engine, all of these fees act like a turbocharger.
Each one might seem small, but when you multiply them by millions of customers, it becomes a gigantic source of profit.
So now that we've seen how the whole machine works, let's bring it all the way back to the beginning. Back to you. It's easy to feel like you're just a small fish in a giant ocean, but the truth is, your deposit is the fuel that makes the whole engine run.
And the logic is really simple. No deposits means there's no pool of money to draw from. No pool of money means no loans. And no loans, well, that means no primary income for the bank. It really shows you just how essential every single depositor is to the entire model. Your one single deposit, when it's combined with millions of others, creates the financial foundation that allows banks to do everything they do, to lend to families buying their first home, to fund entrepreneurs with a great idea. Your money is not just sitting there, it is an active, vital part of the economy.
So, the next time you open your banking app, I hope you see something more than just a number. I hope you see your part in this massive, interconnected financial system. Because really, understanding how this system works is the first step toward making it work better for you. So the question I'll leave you with is this. Now that you're in on the secret, what does banking really mean to you?